Hello, how are you doing? You're welcome to another video recording. So to the upper left of my screen, today we are going to be looking at market structure. What are the types of market structure? What is a breaker structure? And what is a transition phase in the market? This is video 11, and we are going to be looking at introduction to market structure. So I'm going to be explaining to you what market structure is, what are the types of market structure. So how many types of market structure do we have in the Forex space? And what is a breaker structure? What is a transition phase in the market? And then at the end of this call, an homework will be given out, which you will be required to do before you proceed to video 12. All right, yes. So to the center of my screen up, you can see market structure. And then I did some little color combination. The market has green, structure has red, just to give you an idea that's about buying and selling, right? Remember, bullish candle, buy candle is a green candle, sell candle is a red candle. So I just wanted to make this color so you can just have a quick recap of what you have watched in the past recording. All right, so quickly let's head over to Google and then uh, put what is market structure in Forex. You can see what is market structure in Forex. And as you can see here, it says that market structure is the behavior, condition, and current flow of the market. So you can see the behavior, condition, and current flow of the market was highlighted. So those are a very key point you want to remember. Market structure is the behavior, condition, and current flow of the market. It highlights support and resistance level, swing highs, and swing lows. A trend is simply a consistent direction of price movement over time. Market structure can tell you if the market is trending or not. So yes, I agree with this definition, and we are going to be using this definition as a guide throughout this call. So quickly, market structure is the behavior, the condition, and current flow of the market. So if you open up your trading charts, if you go to Trading View and you click on the super chart, and then it brings you to the currency, like you open the super chart and then you find out that you are on Euro USD chart. Now, if you are trying to tell what the market is doing by just looking at the chart and see that it's going up, that is market structure already. So you are trying to understand the behavior, the condition, and the current flow of the market. So when I pull up Euro USD now, and I'm seeing that the candles are going up, I'm trying to understand what the current flow of the market. So how is the market behaving? What's the behavior of the market? Right. So if I see Euro USD going up, that simply means that price is the current flow of Euro USD is to the upside. And that is what we call institutional order flow, right? So what is the current flow of Euro USD? Since I'm an Euro USD chart, price is going to the upside. And then if I also open another asset and I see that the asset has been going down over time, let's say from let's say from January 2023, this year, January, and then all the way to present June 16 today. Now, if the chart has been going down, the market price has been dropping from January, I can say that the order flow of the market, that particular asset is to the downside. So just by looking at it, I can tell if price is going up or price is coming down. And you can see this little chart that we have in this area. Let me zoom so you can see clearly. You see this, right? You can see what is price doing over time. Price over time is going to the upside. So the current flow of this chart now is to the upside. What is the behavior? What is the condition that is going to the upside? So that is market structure for you. You're trying to determine what the current flow of the market is. And then, like I say, it aligned support and resistance. So support means price goes up from there. Resistance means something that is resisting price from going over that, right? And then you can see all of the swing point, the swing high and the swing low, all of that can also serve as, yeah, we can use that as market structure. When I go into the examples and then I start to draw some annotations, you will be able to see all of these things clearly. Then after that, we can also see here, it says that a trend now is simply a consistent direction of price movement over time. So a consistent direction of price movement. So that means something is consistent direction of price movement is going in one direction to the upside. Now, because of the um, too much activities of demand and supply, price might not just buy once. You can see some bullish candle followed by a couple of bearish candle followed by bullish candle. But when you zoom out, or should I say when you zoom, because if I do like this now, this is me zooming in. If I zoom out, so when you zoom in, okay, when you zoom in on the trading view, you will be able to see what price has been doing, right? You'll be able to see the structure of the market. So if you zoom in, you'll be able to see it clearly. Okay, so yeah, so that is market structure. And then it says market structure, yeah. Market structure can tell you if the market is trending or not. So trending means, just like the definition before that, a consistent direction of price movement in one direction over time. It needs to take time for us to know it is actually trending. Okay, so that is market structure. Now you know what market structure is. Now, the second thing we are going to be talking about is what are the types of market structure? So now you know that you know what market structure is, right? So now what are the types of market structure we have in this Forex space? Okay, you know, I was actually I had a call, a private call with one of my students, and she kind of gave me a funny definition of what market structure is. And then going to the types of market structure, she started to tell me some funny things of different types of market structure. But then what I could see was that she was looking at it from the real world market situation now. You understand? So she was giving me the types of market structure based on real world experience. But now, the type of market structure I'm introducing to you now is a market structure that is within the Forex space, okay, that is related to the Forex market. And there are three in number. Number one, we have the uptrending market. So three, or let me say there are three types of market. There are three types of market structure. Number one, we have the uptrending market. Number two, we have the downtrending market structure. And number three, we have the consolidation market structure. RUCTU. So exactly. So these are the three types of market structure that we have. Number one is the uptrending market. Number two is the downtrending market structure. And number three is the consolidation market structure. Now, from their prefix, you can be able to tell what it is. Up means something that is going up. Down means something that is coming down. Consolidation, I know that can be a little bit uh, confusing, but what that means, I'm going to explain to you when we get there. All right, the first one and the second one, just the prefix alone, you can tell that up means a market that is going up, down means a market that is coming down. So what we're going to do is we're going to divide all of this into three. So we're going to have this as this area for the uptrending. Okay. Exactly. So we're going to have this as uptrending market structure. Yes, we can decide to make this green because this is signifying bullishness. And then we can have the second one, which we can say is downtrending. Okay, and we can signify this as red since it's going down. Red rather. And then the third one is the consolidation market structure. Okay, so we can just remove all of this and put consolidation market structure. And we can just have this neutral since this do not have anyone. So quickly, let's do something like this. Okay, we're gonna have this here as this is the uptrending. I have this as the downtrending, and we can have this area here as the consolidation market structure. So we divide it into three. Okay, I just want to make this very neat so you can have a very good understanding of what I'm talking about. Okay, so now we're going to look at the uptrending market structure. So now I already told you what the uptrending market structure is. I gave you an idea of what it is. This is when the market structure is going continuously to the upside. So if we had to give a definition to what an uptrending market is, we can say an uptrending market structure occurs when price continues, or an uptrending market structure occurs when price continues to create a new high and new low. A situation where price takes out the previous high and expects the previous low continuously. Exactly. So yeah, this is an uptrending market. So we can just try to do something like this so we don't have it everywhere. We can use creates previous high. Exactly. So we can have something like this. So an uptrending market structure occurs when price continues to create a new high and a new low. A situation where price takes out the previous high and expects the previous low continuously. So it has to keep happening in order for us to say, okay, this is an uptrending market. So now if I'm going to use this tool, and let's say we have this something like this, and then we have something like this. Now, I'm going to use this as an example and say, okay, maybe this is a price movement, right? So let's say we have this is price. Price went all the way from this low to this high. Now we can see that this down here is what we call a low, and this area down here, we can call this area a high. So let's bring out this text tool here and say, okay, this is a low. Now let's try to reduce that to maybe 14. Yeah, that's good. So let me bring it up a bit. So we have this as low and can call this the high. All right, that's good. Okay, so we have this as the low and then this is the high. Now, Let's go back to the definition again. It says an uptrending market structure occurs when price continues to create. Now, continuous means it has to keep happening, continue to create new highs and new low. A situation where price takes out the previous high and respect the previous low. Now, price has given us this low, and now we have this high. Then we see price. Then we see price go all the way from this high, and then price comes down and give us this low. Now, what do we have in this place? Price has now retraced. Price has gotten to a high, sold back down, okay? Give us another low. Now, from that low, we see now that price from this low now buy up again and give us a new high. In this, what has happened here now is that, let's come back to the definition here. It says a situation where price takes out the previous high. Now, this is a high, but now price has bought all the way to the upside. It has already closed and gone above this high. This is the condition we want to see in order for to say price is up, in order for us to say price is uptrending. Okay, a situation where price takes out the previous high. So now price buying up, price has taken out this previous high. And what happened? Price actually sold down, but did not get to this low. So what can we say about that? Price has respected this low. And what happened to the high? Price closed above the previous high. We can call this what? A bullish market structure. So now we have this low, we have this high. Now price sold down. This is actually a low, but what kind of low is this now? We're not going to call this a low again. Now this is a low. This can also be a low, or this is a low. But in the Forex space now, we call this, instead of saying just the low, we're going to call this now a higher low. Now, why is this a higher low? Because this low is actually higher than the previous one. Are you catching it now? That is why we call this a higher low. So if this is a higher low, what are we going to call this place here? We're not just going to call this a high. What can we call this place now? So I'm going to wait a couple of seconds for you to think. What are we going to call this high? So I'm going to assume you've thought of it already, right? So we're going to call this high a higher high. See it now? And why are we calling it a higher high? Because this high is actually higher than this high. Are you seeing it now? Let's come back to the definition again. An uptrending market structure occurs when price continues. It has to keep happening to create what? A new high. So this is a new high price has created, and price has created a new low here. It says a situation where price takes out the previous high. So price has actually taken out this high and respect this low. It sold down but did not get to this. So this moved down, came down but did not get to this low. Respected it, rejected, and went back all the way to the upside. Now it needs to keep happening. So therefore, we have another scenario where price get to this high again, and then price sold down. Okay, now it has respected that low again, and then price again from here go all the way to the upside. Now, when we see this happen, what are we going to call here now? This is also going to be now a higher low. Why are we calling this a higher low? Because it is actually higher than the previous higher low. So this is our new higher low, and then this becomes our new higher high. So it should keep on happening like that. We should see it keep on happening like that. So price should keep going higher high, higher low, higher high, higher low, higher high, higher low, higher high. You see it now? That is an uptrending mark. That is how to identify it. What is the general order flow? Where is price going to? Just looking at it at a glance, I can see that price is going to the upside. Price is heading to the upside. So let me make this exactly. So we can do something like this, right? So price is going to, the general direction is to the upside. That is an up. This is how to identify an up trending market. So let's come back again to this place. Okay, let's come back to Google and then let's bring this up again. Now it says market structure is the behavior, condition, and current flow of the market. It highlights support and resistance. Let's start with that. Support and resistance. So support means like where I am, my office here now, the floor is serving as my support. I cannot go below this floor. Now, in the same office here, I have a ceiling. The ceiling is serving as my what? Resistance. I cannot go beyond this ceiling except I go out. If I'm throwing something up now, the highest place it's going to get to is the ceiling and it's going to bounce back down. As it's coming down, it cannot go below the floor. So you see, the floor is my resistance and the ceiling is my what? Support. Oh, sorry, the floor is my support, the ceiling is my resistance. So when we bring that to the market now, what that means is that they're saying that market structure help you to highlight support and resistance. You see this area here now? This area, I can call this area what? A support. So let me just take this back normal. So I can call this area what? Support. So we can signify support. Let's use support as green, and then we can use resistance as what? Let's use resistance as red. Okay, so you see. So let's use this as red. So this is the support and resistance level. Then came down and then gave us a new support. Are you seeing it now? And then price went all the way to the upside, gave us a new resistance. Okay, and then price again sold down, gives us a new support. And then price most likely has given us a new what? Resistance. So that definition, as you can see, it highlights support and resistance level. So market structure can help you to identify support and resistance level. So that what this means now is that in order for this uptrending market condition to be met, as price is coming down, we say it should respect the low. What we're trying to say is it should find some kind of support before it gets to this low. And then it does that, goes up. It should find some kind of resistance afterward, taking out this previous high, and should sell down. And then as it's coming down again, it should find a new level of support. It should go up from respecting this previous low. That's it. And then let's come back here again. It says, after identifying support and resistance, it said market structure can also help us to identify swing highs and swing lows. Now, what does that mean? Swing high and swing lows. We can use this tool now, and then you can say this is a swing low here. That is a swing low. I can make that red, green. That is a swing low, serving as what? Support. This area here, this is a swing high. And we can make this red. And then price comes here again, gives us a swing low. Yeah, make this green. In this area, gives us a what? Swing high. That's a red. And now we have a swing low. Yeah, that's a green. And then, yeah, where we are presently, this is a swing high. That's a red. So that's it. Market structure can also help us to identify all of these things. So now, one big question that should come to your mind is, okay, now I know market structure. I can identify an uptrending market from what you're explaining to me now, coach. Where should I be looking to buy? Or where is the best place to buy now? Because all these things you are learning, you're not going to be using any of this to write an exam. You're learning these things so you can go to the market and be able to make some money, right? So now how do you convert this idea or this teaching now to a money-making strategy? Now, in an uptrending market, you only want to be buying at where? The higher low. That's it. So in an uptrending market, I only want to be buying at where? The lows. So we can just make this green, or let's choose another color now since we have a lot of colors already. So yes, we can do that. And I will do this. So we can just make the higher low come this side. So in an uptrending market now, the only place you want to be buying, or the best place to buy, is at the higher low. So we can come here and do this. This is the best place to buy. That's it. So we can just make this also green since we are looking to buy. So this is the best place to buy. So if you want to buy any asset at all, make sure that you are buying at the higher low. That is the best place to buy. Later on, as you keep studying, you will see why this is the best place to buy and the advantage of waiting for price to come to the higher low before you take a buy. I know you might be asking me, how do I know price has stopped selling? How do I know this move down has ended? All of that question, don't worry. Write them down. Write down as many questions as are coming to your head. Just keep writing them down. And I can assure you, as you keep watching the videos, many of this will get answered as you keep studying the video, as you keep watching them, as you keep, just doing everything I tell you to do. Many of this will be answered. So the best place to buy is at the higher low. So if I want to buy Euro USD now, I want to be buying at the higher low. If I want to buy gold, I want to be buying at the higher low. If I want to buy US 30, NASDAQ, whatever it is, I want to be buying at the higher low. That's it. Exactly. So that is an uptrending market. And I've given you a lot of cool stuff as regards this uptrending market structure. How to identify it, how to draw it, and how to annotate on it. So when I give you when you have your homework now, and I tell you to spot 3 uptrending market for me, I don't want you to just do something like this and then send to me and say this is uptrending market. I will not accept this. Make sure you are writing all of this: higher high, higher low, higher high, higher low. Make sure you are doing that. Why are you rushing? So make sure you do that before you even send it to me. Okay? If you do not do that, I will not accept it. All right, so this is an uptrending market. And as you can see, I've given you a good definition as to what that is. Now, let's just copy this and bring it here and just change a few things. Now, a downtrending market, we're going to come here and say a downtrending market. Okay, a downtrending market structure occurs when price continues to create, instead of highs and lows now, it will be lows and highs. Lows and continue to create new lows and new highs. Then we continue further and say a situation where price takes out the previous low, okay, where price takes out the previous low and respects the previous high continuously again. Exactly. So this is it. A downtrending market structure occurs when price continue to create a new lows and a new highs, a situation where price takes out the previous low and respect the previous high continuously. So it's just going to be the opposite of what I have explained here. So now we have an high, and then price go ahead to give us a low. Okay, let's make this black. All right, let me see what color this is. Okay, yes, that's it. So we have black. So now what do we have here now? We have a high and we have a low. So let me just copy this. Okay, so price is giving us this high and we have this low. Yep, this now as the low. So now, the downtrend in market structure occurs when price continue to create a new low and a new high. So now price sold from this high to this low. Then price started to retrace, reject all the way back to the upside. Price should find some kind of resistance, okay, and the price should sell down. Now, what has happened here? Let's come back to the definition. Occurs when price continues to create a new low. That means it should keep creating new lows, thereby it should take out the previous low and new highs. A situation where price takes out the previous low. So once price can sell down below this previous low here, the previous low was at this level here, right? Once price can go below that and close, then that's a downtrending market, right? So price should take out the previous low and respect the previous high. This is the previous high. The previous high was up here, but price should not get there, okay? Price should not get there, and price should reject and come all the way to the downside. So now we're going to have this also now as a high. This is a high. But now we're not going to write this as a high also. We do not want repetition. So now this high, what are we going to call this high? Now, because this high is actually lower than this high, we're going to call this a lower high. See it? Exactly. Now, this is a low here. But what kind of low are we going to call this now? This low is actually lower than this low. So we're going to call this low a lower low. See it now? Very simple stuff. Okay, very simple stuff. This is a lower low. And then what happened? The last word here says continuously. So it has to keep happening. So therefore, we're going to have a new price movement all the way to upside. Feel me? And then price will come down again. And it should give us something like this. Now, this is a downtrending market. So now we have this area here as the lower high, and this area here as the lower low. Okay, so let me just do this. All right, cool. So you see, so now the high, the lower high, the lower low, the lower high, and the lower low. So this is a downtrending market. So you can see it's just the opposite of what an uptrending market. So let me end this with an arrow. Okay. All right, cool. So this is the downtrending market. So now every other thing here we're just going to add. Remember, in the definition of market structure, it said a market structure helps us to identify what support and resistance. So now, okay, this area here, when price created this low, it found a level of support here. And then price rejected from there, came all the way what, to a resistance, and then price sold from there. Then price will sell down again to get to another level of support. And then price will buy up, get to an area of resistance again, and then it's going to drop. It should keep happening. Remember the word continuously. Okay, and then price is going to give us a new low, and then it should find some kind of support, and then price should reject and go all the way to the upside. So we've been able to identify the support areas and the resistant areas. Now, it also said that it can help us to identify what swing highs and swing low, right? So this was a swing high in this area, and then this was a swing low, serves as support. This was a swing high here, I'm gonna make this red. This was a swing low. Yeah, we can make this green. And then we have this as a swing high, make that red. And then we have this as a swing low, make that green. See it now. So now the next big question comes, where is the best place to sell? So in a downtrending market, the best place to sell is going to be at the lower high. Very simple stuff. So we can just make this green, blue, rather, and then we have this area here. We can just adjust this, and we can just adjust this a little. So this area is at the best place to sell. You can say this is the best place to sell. Now we can change this to red. Definitely. Okay, so this is the best place to sell. So in a downtrending market, we want to be taking our sales at the lower high. Lower high is where you want to be selling. And then in an uptrending market, you want to be buying at the higher low. So these are the first two types of market structure. And then after this, what if in a situation where price is not going up, price is not coming down? That leads us to the third type of market structure that says consolidation market structure. So now quickly, another name for an uptrending market. So we can say an uptrending market can also be called a bullish market. So don't get confused when you hear the word bullish. So an uptrending market can also be called a bullish market. That's it. So don't forget that. Okay, an uptrending market can also be called the bullish market. And then a downtrending market can also be called a bearish market. So one is called a bull market, the other one is called a bear market. So that's bullish and bearish market. Okay, so now going to the third type of market structure. This one is not bullish, this one is not bearish. You understand? Now, when we're talking about the uptrending market, you can see price is finding new level of what? Support. So there was a support here, there was a support here, there was a support here. And then there were new level of resistance price was rejecting from. Same thing for the downtrending market. But in a consolidation market, price keeps responding to the same support, and price keeps responding to the same resistance. So we can say a consolidation market is a type of market structure. So let's come up with a definition of consolidation market. So we can say this is a type of market structure where price keeps on expecting the same support and the same resistance. Check. So we can just make this also big, and this was 20. Number 3, 20. So we can just make this big also, increase this to 20, and number 3. Exactly. So we can just price keeps resistance. Exactly. So I'm just going to bring this here. So this is a type of market structure where price keeps on respecting the same support and resistance level. Okay. Yes. So it is well defined, right? This is a type of market structure where price keeps on respecting the same support and the same resistance level. What does that mean? So that means we have a resistance. Okay, we're going to signify that with red, and we can type on it and say resistance. Okay, I'm going to make that big. I can make that maybe 14. Put that at the top, and then we can put that at the left. Exactly. So that's a resistance. And we can clone it, bring it all the way down, and say support. Okay, and then we can bring that to the bottom, and then just make that at the right. Then we can change the color to green. So you see it now, resistance and support. And then we have something like this happening. You see, price go all the way up, and then price will come down. Okay, are you seeing now? Price will do something like this. Price will then go up again, come here. I mean, it can even go above it a little, and then it's going to come back down again, something like this. And then we have something like this, right? So now, what am I trying to make you understand? I'm trying to show you that you can see this price is not going up, price is not coming down. I mean, it is actually going up, but it's getting to a certain level, it's coming back down. Price is going to get to a certain level, it's going to go back up. Comes back to that previous level again, come back, goes down again. People actually use this as a trading strategy. Some people can believe that since price has rejected from here the first time, price came back here and rejected the second time, they can even take a sell here, believing that since price rejected the first and second time, it might reject the third time. This is a trading strategy. Some people use this, and I'm not saying it's bad. I mean, if they know how to use it and they are okay, they have been making money from it, then fine. All right, we shouldn't um, look down on anyone or any strategy, right? Because there's something I always say, and I will keep saying it. As long as your strategy, or as long as a strategy is not giving 100% wins, what I'm trying to say is as long as that strategy does not guarantee winning every single trade you're going to trade every day, every week, every month, every year, there is no one loss you're going to take if you're using this strategy. Then that person that invented it can come out and say, okay, every other strategy out there is rubbish. But if your strategy is still subject to losses, I mean, you take some losses at some time, even though the strategy aligns, then you cannot talk about somebody else's strategy. So yes, you're learning how to trade smart money concept. I'm going to be teaching you quite a lot of things, but then I'm telling you early now, even when we do this, it is not 100% win. No, it is not 100% at all. At times we take losses also. Okay, so definitely. Now, like I was saying, this is a resistance here. Price keeps getting to this area here and price is dropping. Now let's see how many times the price get here. In the support level, we had the first touch, we had the second touch, and we had the third touch. Now for the resistance, price came here 1, price here 2, 3, 4. Can you see? Exactly. So this is a consolidation market. Price is ranging. So another name for a consolidation market now. So a consolidation market can also be called a ranging market. Exactly. So yes, a consolidation market can also be called a ranging market. So price is just ranging, at the resistance and the supports. And all of these things, there is another name we call this thing. What is happening in this area? I'm going to be teaching you that much later. Okay, why do the institutions do stuff like this? Why? They do it for some certain reasons, which you're going to be learning later. So this is an uptrending market, this is a downtrending market, and this is a consolidation market. If you have any question, please just let me know. Go over to the library. Why do I keep saying library every time? Go over to the question group and drop your question there, and I will attend to it when I see it. If you have any question as regards an uptrending market, a downtrending market, and a consolidation market. So I'm just going to take, I'm going to copy the link now so I can copy the link. Okay, let's wait. All right, it's taking quite some time. Um, okay, I don't know if that has worked. I was trying to copy the link. Oh my God, brought us here. Okay, let me see something quickly. All right, we're still good. So the link to the image is still loading up. All right, so I will get it for you. I do not want to waste time. Now, the next thing you can see down here, it says, as an up here rather, what is a break of structure? And then what is a transition phase in the market? So this is what we're going to be talking about now. What is a break of structure? What is a transition phase in the market? And then we go over to examples. I'm going to be showing you some examples of an uptrending market, the downtrending market, and a consolidation market. So I'm going to load this up for you later. It's not showing now, but that's fine. So let's just go up. Just going to take this up now. And then remember, we want to talk about what is a break of structure. So I'm going to take this all the way up now. Okay. And now we want to talk about what is a break of structure. It's the RUCTURE. So what is a break of structure? And just make that very big so you can see clearly. So now what is a break of structure? Now you know what an uptrending market is, you know what a downtrending market is, you know what a consolidation market is. An uptrending market means prices going to the upside. A downtrending market means prices coming to the downside. Consolidation market, prices between the support and the resistance, prices ranging. So now a break of structure is a change in the direction of the market. Okay, so a break of structure, this is defined as a change in the direction of the market. Let's just reduce that, looking so big now. All right, so this is defined as a change in the direction of the market. Now we have two main types of breaker structure. We have two main types of breaker structure. Number one is the break of structure to the upside. Okay, that's a breaker structure to the upside. Can make that let's say we make it 24, right? And then we have a break of structure to the downside. So there's no break of structure to the consolidation side. Okay, so we only have a break of structure to the upside and a break of structure to the downside. Exactly. So let's do this also. Okay, can just make this dark. And we have the breaker structure to the upside. So this one is signifying bullishness. We can make it green. Exactly. So price was previously bearish and going to the upside. And then we have a breaker structure to the downside here. And then we can make this red. Okay, cool. Then we divide this into two major parts. So now a break of structure to the upside. And now let's go up again. It says this is defined as a change in the direction of the market. So the market is changing. Okay, the market is changing direction. And now when we come here, it says breaker structure to the upside. That is the first type of breaker structure. So if market is breaking structure to the upside, what was the market doing before? So we can tell me, what was the market doing before? Okay, I think it does. Let's see. Oh, perfect. We have it. So I'm going to leave this here so I can send it to you. I'm going to add it to the video. Exactly. So now this is defined as a breaker, as a change in direction of the market. And then I said breaker structure to the upside. That means what was market doing before? What was price doing before? Price was selling. That is why we can say it is breaking structure to the upside. Okay. So if price is selling, it is not breaking any structure if it keeps creating lows. It is just taking out the previous low. But now if price decide to stop selling and then decide to buy, there is going to be a break of structure to the opposite direction. So now what we're trying to say is price was previously selling, right? So we had price doing like this, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then a break of structure. So now let's look at this and try to understand what was happening. Remember, in the video, what we just talked about now, I said this is a high. Okay, let's make that 10 will be too small. So let me make that 14. I think 14 is going to be okay. You can just change this back to this high. So quickly, we have this as the high, and we have this as what? The low here. So you know this already, right? We just talked about this so quickly. I'm just going to do, so we have this as the lower high. And then we have this as the lower low down here. Exactly. Then I'm just going to copy and paste them quickly. So we have this as lower low, yeah. We have this as the lower low, yeah. And then we have this as definitely. So now you can see this is a downtrending market, right? Lower low, lower high, lower low, lower high, lower low, lower high, lower low. What should happen normally? Price should continue to give us the low, respect the previous high. Remember, it should find some kind of resistance here and then it should drop. But instead, price did not do that. Instead, price decided to buy up and give us what? A close above the previous high. Now, what has happened in this area? Now, what has happened here is what we call a break of structure. So in this area now, what has happened here is what I call a break of structure. So price has broken structure. Price has broken structure now. See it now? Now this is different. What coach taught me is that in the downtrend, price should keep creating lower lows and lower highs and lower lows and lower highs and lower lows and lower highs. But then it will not keep selling forever. See it now? It will not keep selling forever. There will be some time after a long period of sell, it's going to change direction and start going up. So now in this area, that place, that point where price takes out and close the previous lower high or the most recent lower high. I'm not talking about this lower high now. I'm not talking about this lower high. I'm talking about the most recent lower high. That is what we call a break of structure to where? To the upside, because now price has broken structure to the upside. So you know what? Let me do something like this quickly, and we can just bring it here. And I can use this and say break of structure to the upside. Then we can just bring this to the bottom. I see this is a break of structure to the upside. Price has broken structure to the upside now. And now, so if price has broken structure to the upside, what are we going to call this place now? Is it going to be a lower high? No. Price has given us a new high, or we call it a higher high. Anyone you want to call it, right? So we can just call it a new high. Exactly. So now this is going to be a start of a bullish trend. Price has broken structure to the upside. Let me do something like this quickly. Okay. So now what we can be anticipating is that I'm coming. Let me just do normal. And then we can anticipate that price will now give us something like this. And then something like this, most likely. So what has happened? An uptrending market has started again. See, so price change direction from a downtrending market to an uptrending market. So we have the high, and now we're going to have this as what now? This is going to be the higher low. See now? It's changed. And then we have this as the new higher high up here. So now this is a breaker structure to the upside. Definitely. So this is it. Price has broken structure to the upside. Very clear. And now the last thing we're going to be talking about is what transition phase. So at that point, where price breaks structure, this area here, where we have all of this going on here, this is what I always call the transition phase in market. This is what I mean by the transition phase in the market. So we can just remove the exactly and just make this come here and click on the line, make it black. And I can call this transition phase in the market. Transition phase. And we can just bring that to the bottom and we can bring that to the right. So this is a transition phase in the market, signifying that price has changed direction to the upside. Now we're going to be talking about breaker structure to the downside. All right, now, so for a breaker structure to the downside, so a breaker structure to the upside means price was previously selling and now price is buying all the way to the upside. So we can do like this, price was selling to the downside and then price changed direction and then price started to buy all the way to the upside. So we can just change this to green. Now for a breaker structure to the downside, what that means is that price was previously buying and then price broke structure and then sold all the way to the downside. So we can make use of this tool and we can see price started from this low. So we had this high, right? Then we had this higher low, then we had this higher high, then we have this higher low, then we have this higher high, higher low, higher high. Yes, then we have this low, this high, and then price broke the structure to the downside. So we can have something like this. So now if we had to annotate on it, we have this as the low. So we can just bring this and then do this all the way, yeah. So this is the low, and we have this as the high. Yeah, and then the price, remember in this area, this is a low, but it's actually higher than this one. So this is going to be our higher low, just like we discussed when we're talking about the uptrend market. So we have this as the higher low. And then we have that high there as the higher high. So we have this place as, oh, sorry. And we have this place as the higher high. So we have the higher high, and then we can just copy and paste all of this. So I'll just clone it. And we have a new higher low here. And then we have a new higher low here. Then we have a new higher high, and then a new higher high. Definitely. So now what should happen in a bullish market, since we can see that price is actually going to the upside, overall price direction is to the upside, right? Let me do this. Okay, no, let me. All right, so now price is going to the upside, giving us higher highs and higher lows and higher highs and higher low and higher high and higher low. Price was supposed to come and give us an higher low and then should go up, should continue the bullish structure. But in a situation where we have something like this now, you can see something like this. This now, this is price breaking structure to the opposite direction. So what is the opposite of price going up? That is price coming all the way to the downside. So price decided to close below the high low. Therefore, we're going to have that as a break of structure, which I normally signify as BOS. So we're going to call this a break of structure. A break of structure. Let's put this at the top. And just like I did for that one, let's just clone it. Then we can have it exactly. And then we can just put a breaker structure to the downside. Exactly. And we can just have this at the bottom. Good, exactly. So yeah, so now this is a breaker structure to the downside. And I'm going to also identify this area where we have the breaker structure, the area where we have all of this going on, where we had the last previous high, high low, and then a higher high. And then price decided to break that structure. So all what is happening in this area is what I call the transition phase. So this is the transition phase. This is where price is changing direction from where it was before to a new direction. So price was going up and now price has broken structure. Price is now coming all the way to the downside. So we can make this red, definitely. So this, we're going to call this the transition phase. Transition phase, definitely. So this is what I call a breaker structure. We have a breaker structure to the upside. Yeah, price was previously selling and then price started to buy up. First, we need to see this happen, the breaker structure. Then price is buying all the way to the upside, and then it breaks structure to the downside, signifying that the market is about to sell down. All right. So now let us look at, let me copy this first. Okay. Now we're going to look at examples. We're going to go now to the chart and look at real-time examples now of these things. So let's just keep this here, and then we have that there. Okay. And then let's come back to the chart now. So now we're going to be looking for examples of an uptrending market, an example of a downtrending market, an example of a consolidation market. Then after that, I'm going to be showing you a break of structure and transition phase in the market. Then before the final thing, which is the homework, I'll be telling you what exercise I want you to do. So now, still on this chart, we're going to use the same Euro USD, but then we're gonna go all the way. Now, this is the market. This is the market. This is real candles now, all of this. So now we are in the real market now. Now, remember, in a downtrending market, just looking at this chart already now, you can't tell that Euro USD, just looking at it now, you can tell that it was going down and then started to go up. So you see, the market is doing these two things. Either it's going down or it's coming up, and then the last condition is that we're going to see price consolidate. So in this area now, we can see this is an example of a downtrending market, right? If we take out this part two, we can see that what? Let's say we start from that high to this low. And you see price gave us this over high, price came down, right? And then price gave us this lower high, price came down, was this lower high. Are you seeing it? Lower low, lower high, lower low. So in this case now, if we bring this out, you can see what is happening here. Price is giving us lower low, lower high, lower low, lower high, lower low, lower high. Now it will not be picture perfect like the way I drew it for you. Yeah, like you just see lower low and lower high. You will see some internal structure. You will see some smaller structure, but then that is going to be quite advanced for you now. So I will not talk about it now. You will see the video later as you keep studying. All right, but for now, we're just going to do with what we have now. This is an example of a downtrending market. Okay, this is an example of a downtrending market. So first, we're going to put this as the low. So we have the low here. This is the low. And we have this, sorry, that's the high rather. And then we're going to have this as the low. Okay, so we can have this as the high. And then that is the low. And then what happened? We have this as the lower high here. So the lower high. And we have this area here as the lower low. Sync now. Lower low. And then we can just keep copying. So we now have this as the lower high. And you see, we have just the lower high. And then we have this now adds the lower low. Yeah. Okay. Then we have this as the lower high. Then we have this as the lower low. You see now this is a downtrending market. And then we have this as the lower high. And we have this as the lower low. So Euro USD now has been, or at some point in the past, was downtrending, as you can see. So from February 2022, see lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So you can see the price has been selling all the way to the downside. Right, so this is an example of a downtrending market. So if when you are doing your exercise, your homework, this is how I want you to do the chart. This is how I want you to annotate on the chart. That is why I've explained to you how to use the trading view so you get familiar with all of these tools. And then when you've done this, you just take out the call out and do something like this and let me know that this is down trending market. So this is one, and you come here, you copy the link, and then when it's ready, you send it to me, and this is your downtrending homework one. All right, so this is how I want you to do it. So this is an example of a downtrending market on Euro USD. Okay, good. So now we're gonna go over to AUD US. We're gonna go over to AUD USD so I can show you another downtrending market example. All right. So for AUD USD, I'm just going to show you. All right. So let me just show you this. Okay. I will show you this. So this one now also we can see this is an example of a downtrending market, right? We have this as the high up here, and we have this one down here as the low down here. Oh, sorry. Then we have this. We have this as the low, and then we have this area here as the lower high. We have this as the lower high, and then we're gonna have this down here as the lower low. As you can see, this is closing below this, but they are actually respecting this previous high. Okay, so that's how we know that this is a downtrending market. Don't forget. Okay, so we have the new lower low, and then what happens? Price should buy up, which it did, respect this previous lower high, find some kind of resistance, and then drop all the way to the downside. So we have this again as the lower high, and then price should give us a new lower low. So this is an example also of a down trending market. Price is going all the way to the downside. If you bring this tool here and we draw something like this, you can see this is going to be a downtrending market. I'm going to open it. I'm going to take it away now so you can see. If we remove it now, what can you see? I can see a high, and I can see a low. I can see lower high, lower low, lower high, lower low. This is a downtrending market. See it now? Definitely. That's it. That's a downtrending market. So for AUD USD, this is a downtrending market. So if you're doing your homework, this is how you're going to do it. And then you copy the link and then you send it to me, downtrending homework 2. So those are the two examples of downtrading market, just to give you an idea of what it is, of what it looks like on the real chart. That is it. Now we're going to go over to looking, for example, for an uptrending market. So the first one I want to show you is AUD NZD. So if I head over to the chart, and then for AUD NZD, already you can see the price is what? Bullish. You can see our price is going all the way to the upside here. It's very obvious that it's climbing up, right? The price is going up. Because at this very low down here, this low here, that is priced at 1.03156. And then price went all the way to the upside at 1 point, let's see, price went all the way to the upside at 1.14901. That is about, give or take, let me see. That should be about, yeah, that is about 1,000 pips, 1,176 pip movement. So it is obvious that price was going to the upside. So now let us check the structure. What kind of structure? This is bullish, right? So now let's try to identify or annotate on it, showing the higher highs and the higher lows, right? So we have this area here. Okay, we can say this is the low. Yeah. And we have this as the high up here. Or remember, in a bullish market, price should continue to create highs and lows. A situation where price respects the previous low. So if we have this low, yeah, price should respect it and not come there, find some kind of support, and then go all the way to the upside. Right. So we have this as the higher low because it is actually higher than the previous low, and a situation where price continue to take out the high. So if this is the high, we want to see price take it out to the upside, and we actually have price took it out up here. So we can call this now a higher high, or we can just put it all the way up here, or you can put it here, a higher high here. Okay, so we have the higher high here, and price is going to give us this higher low. Remember, I should keep respecting the low, and it should continue to break the high, the previous high. So we have a new higher high here, and we have this higher low here. And then we have a new higher high here, and then we have a new higher low here. And then we have a new higher high here. You seen it now, and then we have a new higher low here. Now let me check something. Yes. So we consider the body of the candle when we are talking about candle closing, or whether it's going to be a new higher high, right, or a break of structure. We look at the body of the candle when we're considering the close, when we're considering a new higher high or a break of structure. I can see the highest here was this body, right? This was this bullish candle created the highest, and I just drew a line to measure it. I can see this candle also closed above the previous level here. Or if you come to the line chart, the line chart is going to show me clearly. You can see this went above this area. So this is a break up. So this is price creating a new higher high in that area. So we have this now as the new higher high, and then price should continue to respect the low. Don't forget, so we have a new higher low, and then price gives us a new higher high, and then price gives us a new higher low. So can you see this is a bullish market. This is an uptrending market. Price is going all the way to the upside, and as you can see, price then created a new higher high up here, right? So that what we would have been anticipating was that price was going to give us maybe this as the higher low and then buy up from there. But instead, price said, okay, we are tired of buying. And then you can see what happened in this area. This is what we call a break of structure. See it not, but we're going to come back there. Or we're going to come back there. So this is an example of an uptrending market. As you can see, price is going all the way to the upside. That's it. Higher highs and higher lows. And can you see all of these lows were expected? This low was expected. This low expected this one. This one expected this one. This one expected this one. This one, this one, this one, this one, this one, this one. You can see they're all expecting the lows. That is going to, when you see that, then we know that this is an uptrending market. Then the second example we're going to be looking at is on CAD JPY. That is the Canadian dollar, Japanese yen. All right, so for CAD JPY also on the daily time frame, we can see in this area that price was bullish here. So we're just going to use this in this area here. So we can see we have this as the high, yeah, and we have this as the low. So I'm gonna use, this is a very good example I want to use to explain to you. So we have this low, and then price went all the way to the upside. Okay, this is now our higher high. Good. And we have this as our higher low. Yeah, higher low. Now, you could have had this as the higher low. Now, why did I not have this move down as the higher low? Yes, price sold down from here, give us this higher low, but it is still a potential higher. It's not confirmed yet. Why? Is because yes, price started to buy up, but did we close above this body of the candle? No. We need a candle to close above that in order for us to signify that as a new higher high. But instead, price just bought up, didn't close above, it didn't fulfill the condition, or it didn't meet the condition, and then sold it down the more. So it is this one, this move, this low that now led to price closing above this previous higher high. That is where the higher low is going to be. Okay, so the higher low is going to be here now, because this is the low that then led to price creating a new higher high up here. So we have a higher high up here now. Let's see, this gave us a higher low. Let's try to confirm it if this is a confirmed higher low. Did this higher low lead to price closing above the body of this candle? Can you see I'm drawing my line at the body? I have no business with the wick. Okay, I'm drawing it at the body and I'm just going to draw it to the front. Did we have any candle close above? Yes, let me zoom so you can see. Yes, this candle closed above. Therefore, this is going to be a new higher high. And let's see. We said price should respect the previous low. In this case, now you can see it's a little bit tricky, right? This week actually came below this, our last higher low. You can see this went below that. Now, in this case, are we going to say this is a break of structure? No. We always consider the body of the candle in order to define if it is going to be a break of structure or it's going to be a new high or a new low. So now let's come to the body now. This is the body, this is the lowest body here. And now we can just draw all the way to the front. Do we have a candle body close below? No. It is only a week. If you go into the line chart now, you will see that this is actually a higher low. You can see we expected it, didn't get this low down here, and then price went all the way to the upside. So I always use the body of the candle to determine if my structure, if price has broken structure, or if a new high or a new low have been created. So in this case now, you can see there's a very good example. Price did sweep, price did, so price sold down below this area. To some people, they can call this a breaker structure already, but to me, this is not a break of structure. This most likely can be a run on liquidity and all of that, which you will be learning later. But then we are only considering the body of the candle. Remember, a bullish candle, this is the open, this is the close, right? This is the low, and this is the high. So we're only looking at the open and close. The open here, close above, that is what we're looking at. It did not close below this previous higher low yet. So therefore, this is still a bullish market. So we have this now as the higher low. Yeah. Okay. And now do we have a new higher high again? Yes, we do have a new higher high. All right. So now see this now. After this higher high, price came, give us a higher low. But a higher low can only be confirmed after price has closed above the previous high. So this is the highest high we had here. Do we have any candle body close above this area here? No. If you go to the line charts, you can see none of this closed above this previous higher high in this area here. So this is still a potential higher low. We're not sure yet. But now price now went all the way up and then decided to sell down massively. So until this is only where we're going to be looking at, and then we can call this a break of structure when price takes out the previous most recent higher low. You get it now? Exactly. So this is not a higher low, except we're looking at the structure within the structure, again, which you will be learning later. But you just keep it simple: higher highs and higher lows and higher highs and higher lows. So this is an example of an uptrending market on CAD JPY. So I've given you two examples of a downtrending market. I've given you two examples of a downtrending market. So now let's go over to another asset, and we can look at an example of what a consolidation market looks like. Remember, I told you in a bullish market, the best place you want to be buying is at where? The higher low. That is where you want to be buying. So if you bought here, this could be another opportunity to have bought, and then you can also bought in this area. Yeah. Now imagine if you got in here now from this low here, you would have made 944 pips. That's 944 pips. Then this one also, this would have given you about 586 pip. This would have given you about same thing, about 940 pips. Wow, that's a big move. Exactly. So this is an example of an uptrending market. So now for consolidation market, let's come over to USD JPY. Okay, USD JPY, and instead of the daily time frame now, let's go to the 15 minutes. Let me show you an example of what a consolidation market looks like. Sideways, right? The market is just ranging. So this is one good example here. We're going to call this now our resistance. Remember the resistance we drew? Red, right? And we can call this resistance. So we just bring that to the top and left, and we can increase it to 14. So you see, this is a resistance, and this is an example of a support. See it clearly now? Exactly. So just bring it to the bottom and take this to the right. So you see, this is a ranging market. What can you see? Price came all the way up here, so down. Okay, created the resistance and the support, went all the way to the upside, came very close, rejected again, came very close, rejected again, came here at that same level. Okay, came back down, came back up again, and then rejected heavy to the downside, and then from here went again all the way to the upside. This is an example of a ranging consolidation market. It didn't last for long, but this is an example. So the consolidation started on June 9, and then price left that area on June 13. So it took a couple of days before price left that area. But this is an example of a consolidation market, right? This is one example of a consolidation market. So now let's look at another example on AUD Chef. AUD Chef. Okay, on a 1 hour time frame. Oh, sorry. So AUD Chef 1 hour time frame. And we can have this. Okay, good. So I can use this one to explain to you. Now, in this area also, we can see that this is consolidation, right? So we have this now as the resistance. Yeah. Okay, let's bring that to the top and left. And then we have this as the support. Yeah. Support. You see, price came all the way to the support, rejected, created a resistance, price dropped, came back down, somewhere in that area, bought up again, came here, rejected, came close to it, went up again. We had all of this rejection, rejection, rejection. Came here, went a little bit below it, but still held, took price all the way to the upside, and then price finally left that area. So you can see this is an example of a consolidation market. Okay, so you can see price was previously selling down before, went into a consolidation phase, continued to sell down. Right, at times it can sell down, go into consolidation just to continue buying, and just to now change direction and start to buy all the way to the upside. So this is an example of a consolidation market. I've given you two examples of a downtrending market, two example of an uptrending market, and now giving you two examples of a consolidation ranging market. So now for breaker structure, let's head over back to AUD NZD on the daily time frame. Oh, sorry. Oh no, instead of AUD, no, not AUD NZD now, I think is AUD USD. I think so. Was it? AUD USD. No, then it must be CAD JPY then. Or was it not? And maybe it's Euro USD. Okay, let's check Euro USD then. How many? Just so yeah, this was an example of a downtrend market I showed you, and then going over to AD NZD, I showed you an example of a bullish market, right? Price creating higher highs and higher lows, and then the last one was CAD JPY, exactly in this area. Price is creating higher highs and higher lows and higher highs and higher lows. Exactly. So let's head over to USD JPY quickly. Was it USD JPY now? On the 15 minutes time frame. Yes. Okay, so I want to show an example of a breaker structure to the upside, a breaker structure to the downside. So I'm going to be using all these examples to explain to you. I don't want to make it too complex for you, so I'm just trying to look for a good example. Okay, I think one good example would be USD because I think I can use this one to explain to you. Yeah. All right, so now let us see this. Look at this now. What was going on with price in this area? Okay, let's see. Let's annotate on the chart. We have what this is the low quickly. So this is price breaker structure to the upside. This is a low, and we have this as our high, right? Good. Then we have this now as the lower low. Okay, we have this as the lower low. And we have this area here as the lower high. Okay, just follow me. Lower high, right? Then price gave us this new lower low. Yeah. Okay, this area here, this is where we had the new lower low. And then price gave us the new lower high. Yeah. And then price gave us a new lower low. Yeah. Okay. Price gave us a new lower high. Yeah. And then what happened? Price now gave us a new lower low. Yeah. and then it's supposed to give us a lower high and then sell down, but instead price decided to just explode and go all the way to the upside. So where do we have the last lower high? This is the last lower high, right? This area here, this area. If we can get any close above, we're going to have a break of structure, which I signify as BOS. That is a break of structure. So now, do we have a break of structure here? Yes, we have a break of structure. Right. So now this is price now giving us what? A new higher high. And now remember, the best place to buy is at the higher low. So I'm going to be looking to buy somewhere in this area. And as you can see, price gave me the higher low. Yeah. Now, why am I taking this buy? Because I've been able to identify this area here is what we're going to call what? The transition phase. This is where the break of structure happen. Okay, you see it now? Definitely. So this is a transition phase. You can just make this uh, 30. Exactly. So this is a transition phase to the upside. You can see where we had a break of structure. Right. Let me make this 10. It's looking very transparent now. Exactly. So you see this lower low, lower high, lower low, where we had a breaker structure. This is a transition phase, and our price has changed direction now, giving us higher high, higher low, higher highs and higher lows. We'll continue to. So we had this close above, then we have this now as the new higher high, yeah, and we're gonna have this as the higher low. Can you see? So price broke structure and then started to buy all the way to the upside. So you need to be able to spot this transition phase so you can know that, okay, the trend to the downside has finished. Let me start to be on the lookout for buying opportunities. Okay, because it was previously selling and now price changed direction to a buy. So price is now buying all the way to the upside. So I'm gonna have this as long two and just have this as the red sell. This price selling all the way to the downside. Exactly. So the sell down and this is for the buy up. Exactly. So this is a breaker structure to the upside. So now let's look for a breaker structure to the downside and then we'll spot the transition phase. So let's say, let's check NZDJPY, and I'm just looking at uh okay, we can see um just want something simple, not to let's check Euro USD again. So I've shown you an example of a breaker structure to the upside. Now let's look for a breaker structure to the downside. And how would we trade it? So let's check EU. Let's scale down to the 1 hour. See, how do we take a trade to the downside? Okay. Now a very good example would be the 2 hours time frame. There was one trade I took way in the past. So in the past, it's been so long. Is it 2021 now? It's a very amazing trade on Euro USD precisely. Exactly, this is it. I remember we all took this trade. A lot of us took this trade. It's just so cool. All right. Yes, I think it was this one. Yeah, I think it was it this silo high break? Definitely. So now let's look at the structure here. I remember taking this trade. I still have the markup. This happened way long, May 2021. Yes, I remember this trade. Now look at this. Let's look at the structure again. We have this as the high. right? And then price gives us the low. So we have the high, and then price gives us the low. Yeah, okay. And now price is giving us the higher high up here. So we have this as the higher high. And we have this as the higher low. Yeah. Okay, this was the higher low, but then look at it failed to create a new high, came down. We can just call this the higher low. Now, and then what happened? Price gave us a new higher high. Now look at what happened. Look at what happened with this. Price created a new higher high. And then what happened? Boom, we had what? A break of structure to the downside. Break of structure to the downside. I remember this trade so well. This is around May 2021. As a matter of fact, I can pull it up for you to see now. So you can see, you just have to give me time to just go over to the, let's go over to the signal channel and then look at Euro USD trade idea. That's we're talking about 2021 now. So 2021, let me see if this is it. Let me just new trade idea, Euro USD. I hope this is it. Let me just see. It was a very amazing trade, right? Because a lot of us actually took this trade. This was May 2021. So yes, it should be this trade. Because this is May. When May 21st. So I'm coming. Just need to check it. Coming. Just need to check. Ever USD. This is May. This trade was around June. Exactly. Just have to check. Coming. I want to show you that's why. I want to show you this trade. It's a new trade idea, Euro USD. Let me see if it's this one. Okay, no, it's not there. All right, so I can't find it. It's probably because I'm in a hurry. But I know we have it. I remember we took the trade. I remember clearly we took the trade. Exactly. So but then this is a breaker structure to the downside, and we're actually looking at price, taking out this liquidity and all of that. So we have this breaker structure to the downside. And what can you see? This has given us a new lower low. Yeah. And then we have what price is going to sell, buy all the way to the upside, respect this previous high. Remember, and then should give us some kind of lower high in this area. And then price should give us a new lower low and on like that. See a new lower low, and then it should give us a lower high. So you should just keep doing all of that again. You can see lower low, high, low. And then, so yes, this is it. Right, this now is what we're going to call the transition phase. So this area here, this is the transition phase in price. We can change this to red, and I just put this as transition phase. Definitely. So this is a transition phase. There we go. So this is another example of a breakout structure. This is another example of a breakout structure, but this time breakout structure to the downside. The last one I showed you was a breakout structure to the upside. And remember, the best place to buy is at the higher low. The best place to sell is at the lower high. See it now? The best place to buy is at the best place to buy is at the higher low. The best place to sell is at the lower, it's at lower high. Okay. So give me about 1 minute. I want to check something quickly. Yeah, I mean, when I see it, I will send it to the group so you can see it. All right. I don't want to take too much of your time, but then this is it. This is an example of I've showed you an example of an uptrend market. I've showed an example of a downtrend market, and I've also showed you an example of a consolidation market. So now your homework exercise will be this. This is going to be your homework exercise now. Let me copy this. So homework exercise. Just make this 20, or let's say 28. Looks, look big, right? So now it's gonna be identify 3 for each. So 3 for each means 3 examples each. Okay, identify 3 for each, and 3 for each. Three identify 3 examples. Okay, let's say 3 examples for each of the following market structure. Number 1, uptrending market. So help me look at 3 examples on the chart. Go to any currency pair of your choice. Help me to identify an uptrending market. Don't just draw the line. Make sure you're annotating on it, higher high and higher lows and all of that. Then you send it to me. And number 2, you a downtrending market. Okay. And number 3, a consolidation market. That is it. That is homework exercise. Homework exercise. Yeah. So identify 3 for each. 3 for each of the following market structure. Number 1, uptrending market. You're going to send to me 3 examples. Number 2, downtrending market. You're going to send to me 3 examples. And number 3, consolidation market. You also send me 3 examples. Then homework exercise number 3. Okay, number 2 rather, sorry. So homework exercise number 2, identify also 3 examples of a break of structure. Let's say 4 examples rather. 4 examples of a break of structure. Then 2 examples to the upside. 2 examples to the downside. Okay. And then when you do that, also make sure you are adding this transition phase. All right, make sure you are adding the transition phase to it. So this is homework exercise number 1. Homework exercise number 2, identify 4 examples of a breaker structure, 2 examples to the upside, 2 examples to the downside. So make sure you do this before you proceed to video 12. Okay, make sure this is done before you proceed to video 12. Send it to me. When I see it, I'm going to mark it, and then I will give you my remark on it. All right, so if you have any question at all, feel free to go to the question group and drop your question. When I see it, I will attend to it. So this is going to be the end of this call. Do have an amazing day. Bye-bye.